The Toronto condo market is experiencing some of its most challenging times in recent decades, particularly condo investors that are faced with soaring interest rates, mortgage payments, cost of condo ownership, and rents not being enough to offset that cost. In this video, I'll go over how the investor-led pre-construction market in particular has come to a standstill, why rents have been slow in terms of growth as well as demand, and also the future of condos in Toronto. Hello everyone, my name is Sitzer from Teamster Real Estate. I help clients with buying, selling, leasing, investing, as well as all aspects of pre-construction condos. If this is your first time on this channel, please consider subscribing for all things real estate. So a recent report from Urbanation is highlighting some very interesting facts and figures about the pre-construction market in particular in the city of Toronto. Now, according to Urbanation, condo investors make up 70% of the condo pre-con market. And if you guys aren't familiar, I've talked about this in my videos in the past. For a condo to start construction, there needs to be at least 70% in pre-sales or pre-sold units before a building can even begin construction. And a lack of supply or a lack of construction will result in a lack of supply in the future, which will only lead to hurting affordability even more in the future, especially for renters and also first-time home buyers in the condo market. Now, pre-construction prices are pretty high right now when it comes to current resale prices, the cost of home ownership due to interest rates, you got property taxes, maintenance fees, and the rents just aren't enough to offset that cost. And a lot of investors, particularly ones who closed on their units in 2023 and this year in 2024, are facing some really high cash flow negative scenarios as high as $1,000 a month. If you guys look at this chart, you can see the percentage of pre-construction condos that are pre-sold is at more than 20-year low of less than 50%. Okay, that means that less than 50% of new condo inventory or new condo sales are actually happening. It's the lowest it's been in a very long time. And as I mentioned, without at least 70% of pre-sales or pre-sold units, there's no construction loan being given to builders, which means they cannot build, even if they wanted to. Condominium sales have dipped quite a lot if you look at this chart in Q2 of 2024. Now, all of this means, again, the supply is going to be impacted quite heavily in the next at least 3 to 4 years. Now, the slowdown in projects and construction also impacts jobs, with Urbanation reporting it may impact 40,000 jobs. So for every crane that you're seeing out in the city of Toronto, anywhere in the GTA, they're saying the rule of thumb is around 500 jobs being created because of that building going up. So because of the lack of projects, the projects that have been shelved, it's impacting as much as 40,000 jobs. So again, this is not just, when you look at it from a macro perspective, it's not just impacting the investors and possibly would-be buyers or renters, it's also impacting the job market. Now, on the flip side, developers aren't able to reduce the prices either in order to offset some of that cost for a lot of these pre-construction buyers, whether they're end users or investors, because they are also faced with the cost of construction, high interest rate loans, as well as municipal development fees being hiked up over the last few years. So they're not budging on their price either. New condo prices have dipped by only 5% from their high, while resale condo prices, resale being condos that are already in the market that exist right now, have corrected by 12% and are at risk of further decline given the recent surge in listings. So we're seeing a lot of condo supply coming up in the market right now on the resale side, and I'll get to those figures a little bit later in the video as well. Now, what's absolutely insane is the disparity and gap between new condos, so pre-construction condos versus resale prices. So if you look at this chart, the current price gap between new and resale condo prices are at a record high of nearly 60%. Means new condos are selling for as much as 60% more than their resale counterparts and a full 20 percentage points above its long-run average. Pre-construction and resale condos never had this big of a gap going back, in history. If you look at the last 10 years, The gap there was a time when resale and pre-construction were pretty much neck and neck in terms of pricing, which is why pre-construction was so popular among investors, because they would be able to buy something for a current market value, and that's going to be built in 3 to 4 years. And also it would allow them for the rents to go even higher. So by the time they closed on their units 3 to 4 years into the future, they would in most cases, and actually in all cases, be cash flow positive. So it was a very good investment strategy when things made sense, when we didn't have that big gap in resale versus pre-con prices. Now, the reason we have the big difference in gap between resale and pre-con prices, of course, is construction costs have gone up tremendously, cost of labor. We've got municipal fees going up almost 60% over the last 5 years. So all of this is accounting into the purchase price that are set by the developers. So pre-construction condos as an investment is becoming less and less attractive for condo investors. Now, from an investment standpoint, the share of both resale and pre-construction condos being sold and rented is trending lower for obvious reasons. It just doesn't make a whole lot of sense for investors to buy and rent out in this market, especially in the same market, because mortgage interest rates are so high. The cost to carry the condo is much higher than what the investor would get in terms of rent. Now, here's an interesting fact. More than 75% of all condo rentals added last year, 2023, came from new projects. So these are new condos that came onto the market, and almost all condo rental units so far in 2024. So pretty much majority or all of the rental stock that's coming in 2024 is coming from the new condo inventory or new condos that just got completed. Now, let's look at the cash flow component of new construction condos. Most condos right now are cash flow negative. Using the entire pool of condo rentals completed last year, 58% had a mortgage. And out of the ones that had a mortgage, 77% were cash flow negative in 2023, representing a large increase from 2022, which marked the first time that majority of investment units turned cash flow negative with a 52% share. So we went from 52% in 2022 to 77% cash flow negative in 2023. And I believe the figures are getting worse in 2024. And the reason for that is every condo that's being completed, as we go along, the condos that were purchased were a lot more expensive. So because of the higher costs and the higher costs of borrowing and the rents being more or less the same, we're not seeing any cash flow neutral or cash flow positive scenarios. They're just getting more in the hole in terms of carrying costs and cash flow negative. Now, while rents did increase on leases of newly completed condos to about 8% last year, to a record high of about $2,700, the average monthly ownership costs rose 21% to nearly $3,250 per month. Now, of course, this was again due to a combination of higher priced units and completions being taken place in a higher interest rate environment. Now, if you look at this chart, the cash flow position by dollar amount, when examining the distribution of cash flow by dollar amount, the results showed that 30% of investors of new condos completed in 2023 were cash flow negative by $1,000 or more. Now, again, I do feel that because the condos that are being completed in this year in 2024 were more expensive than the ones in 2023, because every year condo prices of new pre-construction condos were going up more and more, we're going to see probably more higher cash flow negative, more than $1,000 per month moving forward, especially if rates continue to stay high. Now, there's no doubt that condo investors play a huge role when it comes to the rental stock in the GTA, but with a lack of new sales, which translates to a lack of new construction, which means a lack of new supply in the next 3 to 4 years, we're going to see both rental stock and condo stock in general be a lot worse and be very tight, which is going to make affordability harder. However, I believe in 2024 and even 2025, all of the pre-construction condos that were sold in a hot market in the last few years, we're going to see a lot of supply come onto the rental market as well as the resale market, and that's going to impact condos quite a bit in terms of prices. So in the short term, it's good news if you want to buy a condo, and if you want to especially buy a condo to live in, you can definitely get some good deals. And if you're a renter, you're also going to see a lot more rental stock coming onto the market from these newly completed condos, at least over the next year or two. Now, we can already see the high number of listings in the condo market, evident by this graph where you can see the number of resale listings in the month of June going back to 1996. In 2024, we're at the highest we've been in a very, very long time. So condo supply is very high. So if you're looking to buy a condo in this market, It's a great time. If you're looking to downsize from a home to a condo, fantastic time. All right, guys, that's it for the video. If you find any value in this, please go ahead and give it a thumbs up. And let me know in the comments what you think the condo market's looking like over the next year. Thanks for watching. Take care.